everybody and welcome to Relative Strength Index lecture. The Relative Strength Index, or RSI, is a momentum indicator that measures the strength of price movements and that allows you to know where in the market we find strength or where we start to lose strength as well. RSI also forms chart patterns that may not show on the price chart, such as double tops and bottoms, and this indicator allows you to find divergences that signal when to enter or to exit a position, and you can also find supports and resistances using trend lines on the RSI. Okay, so you may know the very basic rule of the RSI, and if you don't know it, you will find it right now. If it is over 70, that means that it is overbought, and if it is under 30, it means that it is oversold. And these are the very basics that everybody should know about RSI. So in this lecture, I'm going to introduce many theories of how I personally use RSI and why it is my favorite indicator to use. Alright, now I want to introduce to you another rule. These rules keep me consistently profitable over time, and these rules are very important. When we develop strategies to trade, we also develop our personal strict rules that we want to follow if you want to be successful slowly over time. And the RSI is one of these indicators that you want to keep a very strict rules for it. Okay? So my strict rule is this one over here, and it is called Brown's RSI rule. We have to remember that for a bullish zone, we want to be anywhere between 40 and 85 and up. And it is important for us to hit these numbers on high time frames to consider a very bullish uptrend. For a neutral zone, it hovers between 35 and 65 ranges. And now for a bearish zone, we are looking for the negative, that means well below 20 to 40-45 range. Okay, you guys know that on candlesticks, we always draw trend lines just like this, and we use them as a support or resistance, and it is actually no difference at all on the RSI. So let's double click on the RSI to have a clear view of this indicator. In the right section, we see that we have a range between 0 to 100, and we will use this bar range to know in which zone we are. So now I want to highlight the zones that we talked earlier, and these are the bullish, neutral and bearish zones to better understand of what I'm talking about. For the bullish zone, we want to be anywhere between 40 and 85 and up, and I will draw a rectangle between these ranges to get a clear view of this bullish zone, and I will annotate it right here that this area is for the bullish zone. The neutral zone is anywhere between 35 range and 65, and I would highlight this as well with a rectangle. And for neutral, I will change the rectangle color to white, and I will annotate it right here that this area is neutral. The bearish zone is anywhere between 40 or 45 ranges to well below 20. For this bearish zone, I will highlight it with a rectangle as well, and for the bearish zone, I will change the color to red. And I will annotate it here that this is the bearish area. Now that we have a clear understanding about these areas of bullishness, neutral and bearishness, I want to show you how you can find signals using RSI, searching for supports, resistances and divergences that could signal us to enter or to exit a position. Sometimes the RSI tells us more than the actual candlestick chart because it shows the strength of the market, and a simple example of that statement is like this. If we make higher highs on the candlestick chart and the RSI is making lower highs, that means that the market starts to lose strength, and that forms a bearish divergence, and that could be a signal to sell. You also have to remember that if we are in a very high area for the RSI of 75 to 85 and up, we are overbought and we cannot sustain in these areas for a long period of time. And also, if you are on a very low area for the RSI of 30 to well below 20, we are oversold and we cannot sustain in these areas for a long period of time as well. and we see for both cases a change of trend for a short or long period of time, depending on the time frame that you are using. For a low time frame such as 5 or 15 minutes, the change of trend will not be so strong, and if you are using a high time frame such as 2 or 4 hours or even daily, the change might be strong if we are getting to these zones of oversold and overbought. Now I want to show you how to find resistances and supports using RSI and a few setups that will help you to find good entries or exits based on RSI, moving averages and candlestick chart. For the first setup, I am using the Neo chart and I am on 1 hour time frame. For this example, I am going to show you when it is a good time to sell based on RSI and candlestick chart. Let's take a look at the RSI, and what we see right here is that we reach to the overbought zone on the RSI of 75, and from that point we start to make lower highs on the RSI. But if you look at the candlestick chart, we are making higher highs, and what does that mean? That means that we are losing strength and soon it will be a very good time to sell. So let's take our drawing tool called trend line and let's draw our trend line right here on the RSI, and you want to connect all of these peaks, and now this trend line will be our resistance. For the first two peaks right here, you see that it starts to bearishly diverge, but you want to wait a little bit longer because on the price chart we see a crossover of the 55 moving average to the upside right here. So we don't want to close our position just yet. So we will wait a little bit longer and see what happens next on the price chart and on the RSI as well. As you can see on the RSI, at the first peak we hit 75 ranges of overbought, and at the second peak we hit 73 ranges on the RSI, but still making higher highs on the candlestick price chart. And on our third peak we hit nearly 72 on the RSI, and on that point over here there is a very clear for us that it could not make any higher high on the RSI. And if you look at the candlestick price chart, we see this huge rejection from the upside, and that is a very strong indication to sell just there. So if you combine the RSI with moving averages and candlestick, RSI becomes a very powerful indicator to use that could help you catch near tops or bottoms. Another example of when it is a good time to sell using the RSI and other indicators is this one right here, and for this example I am using Litecoin chart and I am on 1 hour time frame. So let's take a look at the RSI to find when is the best time to sell this coin. Right here you can see that we hit a very overbought region of 82 on the RSI, but when we look at the price chart we see a crossover of the 55 moving average to the upside right here, and where we hit 82 on RSI we see that we are still above all other moving averages and there is a lot of volume to sustain this uptrend for a while. Previously on the RSI we see this area of support of 51 on the RSI where we bounced five times already, so we will assume that this is a very confluent zone for support. And let's draw our support here using this tool right here called trend line, and I will draw it like this. And now, because a crossover happened to the upside of the 55 moving average, we don't want to sell just yet and we will wait for the RSI to form a bearish divergence, and we'll be watching the RSI, price chart and volume indicator to get a clear idea of where the market is going. So after we've dropped from this high overbought region right here on the RSI, we found support right here where the previous support held, and we continue to ride it and we continue to make higher highs on the price chart. But for the RSI we see that we are making lower highs, and that implies that the market starts to lose strength. But if we look at the volume indicator we see that the volume starts to increase in this region right here, and the candles are still hovering above all moving averages, so we have no reason to sell just yet. Here on the RSI we see a small bearish divergence, but we will stay in this trade until we see a big bearish divergence like up here, and for me that is the best time to sell, because if you look at the price chart we see this whole region right here with a lot of wicks rejecting from the upside, and it also forms a double top, which means that we found resistance at this area of $184 per coin, And for the volume indicator, we see that the volume isn't there anymore to sustain this momentum of going upwards. And for the RSI as well, we see this big difference between these two peaks right here. And that forms a big bearish divergence, so it is time to take profit because we start to lose a lot of strength in the market. For the next setup, I am using Bitcoin Cash chart and I am on 1 hour time frame. And in this example, I am going to show you another scenario of when is the best time to sell using RSI and other indicators as well. So right here on the RSI, we see that the first peak hit a very overbought region of 81. And if we look at the price chart, we have a crossover to the upside of the 55 moving average and a lot of volume to sustain an uptrend. And for example, if you entered a position on the breakout, you don't want to sell just yet because a crossover happened. And if you remember our criteria of when to enter a buy position based on moving averages, to make sure you did not forget those, I will recall them one more time since they are very important. The first criteria is to have at least 1 or 2 candles successfully closed above the 55 moving average. The second criteria is the next candle that closed above the 55 moving average to have more volume than the previous one. And the last criteria is to have a lot of volume on the breakout to be considered a valid breakout and not a bull trap. As you can see, right here we met all of these criteria, and for this type of price action, the 8, 13 and 21 moving averages starts to fan out away of the 55 moving average to the upside, and that is a very good signal to stay in this trade. If we look at the RSI, we see that after this bearish divergence over here, we start to make lower highs after we hit 81 ranges of overbought. But we are still in the bullish area for the RSI of 40 to 85 and up. And I will take my rectangle and I will highlight this bullish area right here. If we look at the candlestick chart, this whole region right here is called a flat correction pattern, and the 55 moving average acts as a support for the candles. And we don't want to panic selling because we have strong hands and we don't see any crossover to the downside of the 55 moving average yet. So we continue to ride it, guys, and if we look again on the RSI, we see this higher high right here. And for this one, we hit a very high overbought region of 90. And for me, that is a 100% signal to sell because nothing could sustain that high for a long period of time. And 100% the next high on the RSI will be lower than this one, and that is a strong indication that we start to lose strength in the market. So I will not worry at all because I couldn't catch the top right here on the price chart, and as you can see, the market starts to downtrend from that high over there. For the next setup, I am using Bitcoin chart and I am on 1 hour time frame. And in this example, I want to show you when it is a good time to buy based on the RSI. So you want to consider a good time to buy when the RSI reaches a very oversold region of 20 or well below 20 ranges. And you want to look for bullish divergences on the RSI, and that implies that the market starts to gain strength and momentum because it reaches a very oversold region. And when we reach a very oversold region, we cannot sustain for a long period of time in that areas, as well as in the overbought examples that I presented previously. So let's take a look on the RSI right here, and what we see is that we hit this low on the RSI here of near 17. And from that point, we will wait for the RSI to start making a bullish divergence. On the price chart, we see that when we hit 17 on the RSI, this candle's low reached $7,867 per coin, but we are waiting for the RSI to make higher lows to see a bullish divergence, and for this higher low on the RSI, we hit 25. And if we look again on the price chart at the candle which corresponds to this new low on the RSI of 25, we see that the price is now lower than the previous low and on the RSI, and now it is a good time to buy because the RSI confirms that the market starts to gain strength, and by using this simple strategy you are able to catch near bottoms or tops just using RSI indicator, But keep in mind that you don't know any other strategies yet to be combined with RSI and other indicators as well. But don't worry, by the end of this course you will see how easy it is to find very good entries or exits when you trade. For the next setup, I am using Ethereum chart and I am on 30-minute time frame, and I will present you another example of when it is a good time to buy based on RSI when it reaches a very oversold range. So let's take a look on the RSI, and what we are seeing here is that we hit a very oversold region of 16.4 and we bounced hard from this support region because we can stay for a long time in these oversold and overbought ranges on the RSI. After we see this bounce on the RSI, what we want to do next is to look for a bullish divergence, and we see it right here on the next low, which is higher than the previous one where we bounced, and that forms a bullish divergence, which implies that the market starts to gain strength. And if you look on the price chart, we can enter our buy position right here, where we also see a bullish engulfing pattern, and we start to ride it because we don't see any reason to sell, because on the RSI we start to make higher highs and higher lows as well. And when the RSI starts to make higher lows and higher highs, it means that the market starts to gain strength, and that is the primary rule of a bullish uptrend. With that in mind, let's take a look on the price chart and see what happens further. And what we see right here is that a crossover happened of the 55 moving average to the upside, and the RSI is making higher highs. And if you look further on the price chart, you can see that a strong uptrend followed after we entered our buy position at $640 per coin, and we want to sell it when we see a bearish divergences on the RSI, or when a crossover to the downside of the 55 moving average happens, which is right here at $808 per coin. So let's say you bought one Ethereum coin at $640 or maybe $650 per coin, and you sold it at $800. You would have made a profit of $150 to $160 in this very easy trade right there. For the next setup, I am going to present you another buying opportunity using RSI when it reaches a very oversold range, and for this example I am using EOS chart and I am on 4-hour time frame. So if you look at the RSI, we see that we hit a very oversold region of 19, and on the price chart we see that the candles are hovering below all moving averages, and that signals to stay away of entering a buy position just yet, because we don't have any volume for a breakout. So we will wait a little bit longer to see what is happening in the market. And what can you see right here at this support range of 19 on the RSI is that it is a very confluent support range where we have at least 3 touches, but we didn't bounce that hard. And when we bounced on the price chart, we can't even test the 55 moving average, and the 8, 13 and 21 moving averages are rejecting the candles to the downside. So to enter a trade in this example, we want to have more volume than what we are seeing right here. And if we look at the RSI, we can clearly see that we are still in the bearish zone. And I will take my rectangle tool to highlight this area of 40, 45 to the oversold region of 30 and below. So for me, this point right here on the RSI now will be enough confirmation to enter a buy position there, because we see that the volume is slowly increasing, and this support range of 19 on RSI held very strong. In short time after we entered a buy position right here at this candle where we see a lot of volume, we see a crossover of the 55 moving average to the upside, and I will ride it until I see on the RSI that it starts to bearishly diverge or a crossover of the 55 moving average to the downside happens. So in this case, if you look at the RSI, we see that it forms a double top here on the 71-72 ranges, and I would have sold it right here where it starts to bearishly diverge. So let's see how much profit you would have made in this trade if you would have taken it. I will take my long position tool right here, and I will say I entered a position right here, set my stop loss slightly below this swing low over here, and I would have sold it where it starts to bearishly diverge on the RSI. So in this trade, just respecting a few rules and simple strategies, you would have made a 64% gain. In this example, I'm going to show you how you can enter a trade just by using RSI and how profitable you can be if you combine it with other indicators as well. For this example, I am using the Ethereum chart and I am on 1 hour time frame. Okay, so we look at the RSI and first of all, let's find some support zones. And if we look down here, we are in a very oversold region of 20. And let's pick this drawing tool right here called horizontal line. And let's draw it right here by just clicking at this low point. In this case, we hit this very low zone of the RSI. And let's assume that it is a very good place to enter a buy position right there, because if you are oversold, we cannot sustain this low for a long period of time in these areas. And for the overbought as well, if we hit a very high number on the RSI, such as 80, 85 and up, we cannot sustain in these areas for a long time as well. Let's see if we can find another confluence support region. And we see here on the RSI that this is a region where we find support from at least 3 touches in the same zone. And we would assume that this is a support and we are not going to break it for a while. And let's draw our trend line right here to mark our support. Okay, so this line right here will be my primary support. And this one over here is my second support where we entered our position because it was very low at the oversold zone for the RSI. So now we start to ride it because we bounced from that very low area from the RSI. And for me, that is a very strong support as expected because we hit a very low number for the RSI. And because we bounced so hard, I see it very clearly that we are not going to go lower than that for a while. The first bearish divergence that you see is right here at the first peak. And if we draw a trend line, we can see that it starts to make lower highs. And that is a signal for bearish divergences. And of course, you could take profit right there and sell, because if we look at the price chart as well, we are facing resistance from the 55 moving average, as you can see right here. I personally would not have sold there because I would have expected to make a higher low than the previous one. And I would have waited to see the next support where we bounce, and we start to bounce again from this 40 range for the RSI. And as you can see, we are making a higher high than the previous one right here. And as well, we see that we start again to bearishly diverge. And now, because we bounced from this 40 range, I would expect it to hold again. So I am not considering selling just yet, because if you look at the price chart, the candles are hovering above the moving averages. And a crossover happened of the 55 moving average to the upside, so I have no reason to sell just yet. As expected, this 40 range right here acted as a support for the RSI, and we keep riding it until we hit a very overbought region for the RSI, and then we start to look for bearish divergences, and we see a lot of them right here. And that means that the market starts to lose strength after hitting a very high overbought region of 81. But if we look at the price chart, we are still hovering above all of the moving averages, and we don't see any crossover to the downside yet. So we will keep riding it to this point over here where we see that we cannot make higher highs after we bounced 3 times of this support on the RSI. So in this trade, let's take our long position tool from over here, and let's set our entry point right here and set our stop loss slightly below the previous swing low over here. And in this trade, you would have made a 32% gain just by following some simple rules and strategies, combining the RSI and moving averages to get confluence from many indicators to help you find setups with higher probability of winning. So thank you for being here with me, and I will see you in the next lecture.